Hello everyone, welcome back to my channel, Life with Yo. Hope you everyone stays safe and healthy. Today's topic is a bit different than my previous topics. Today is about investing money. I started to invest in the stock market since 2012. Back then, I was still an investment banker in Indonesia. On just day-to-day basis, I am exposed to capital market transactions such as IPO, bonds issuance, rights issue, all kind of things. But I was never been an active daily trader. I'm always the type of person that just buys stock and just leave it there for a long term. Even until today, I only check my stock once or twice a week. So in the US, I started to trade in February 2018. I asked my friend, and she's already opened a Schwab account, Charles Schwab, which is one of the largest brokerage firm in the US. It's very reputable. Back then, Schwab still charged about $4.95, so it's about $5 per trade. So it's pretty expensive, yeah. So if, for example, you buy two stocks, one, for example, Apple, and then one other is Amazon, so they will charge you like $10 for that, which is pretty expensive if you are a daily trader, right? But starting late 2019, Schwab offers zero commission fee for online trading. And at that time, a lot of those large brokerage firms finally waived the fee because they want to compete. They want to attract the millennials and also the Gen Z to invest money. As the video title suggested, this video is about 5 best performing stocks in my portfolio. So I did this by a simple math. Basically, how much the purchase cost that incur when I bought the stocks. And the second one, I will compare that to the current price of the stock. By current means whatever the value, the closing price of the stock as of July 31st, 2020. Of course, when I mention about costs, there are 3 assumptions. First of all the cost already includes the brokerage fee, which I told you before is about $5. This is before 2019. So after 2019, there's no brokerage fee included on my cost basis. And then the second one, because I sometimes bought stock over a period of time, you will see the average cost of the purchase price. So what I meant by that was, like, for example, I bought Netflix in 2018, and then in 2019, probably I bought more Netflix. So the cost that you see is an average price of those stocks. So in terms of strategy, there's no actual strategy on my end. So I bought stocks of the companies that I usually understand. I usually use their products. I understand their products even if I don't use it. Or, like, for my strategy, sometimes I also consider the price of a stock that, currently tanking down. Like, currently the stock is on decline, probably because they just announced earnings that didn't hit the analyst estimates. Or probably because I just want to enjoy their dividend, rather than depositing money in the bank, which currently high yield savings only generate 1% of interest rate. Before we dive into 5 best performing stocks on my portfolio, don't forget to smash the like button and subscribe to my channel. Leave comments and feedback. My channel is still very new, so I would like to know what kind of content that you want to see. And here are my 5 best performing stocks in the portfolio. Number 5, Spotify. Average cost $168. The price as of 31st of July, $258, for a return of 53.65%. For a long time, I was worried about Spotify. I remember I hold Spotify back since I first started to invest. And I bought Spotify stock for about 140-ish at that time. And for quite a few years, for a couple of years, the stock price never been that exciting, because Spotify is still in the red. So they still incur huge losses year over year. So starting May 2020, I see there's an increase of the stock price of Spotify, which is weird because, this is pandemic season, right? I mean, what caused that? So apparently there are a few reasons. So first of all, they acquired Joe Rogan podcast. Joe Rogan, if you ever watch Fear Factor, he's the host of Fear Factor, now you know, right? And right now, Joe Rogan's podcast is like one of the most beloved ones. So he has a very loyal fan base, and there's like tons of listeners of his podcast every single week. And because of this deal, people think that, okay, Spotify really serious in terms of this podcast business, right? And in addition to that, they just inked a deal with Kim Kardashian, apparently, for a criminal justice podcast, which adding to like, okay, this is a really good step for Spotify to really strengthen their podcasts. They're not only on the music streaming, but also in podcasts. So the good news that came out from their second quarter earnings is, first of all, the subscription actually came up. So the premium subscribers beat Wall Street analysts' consensus. The paid subscribers reached 138 billion, while the analysts estimate it was going to be around 136.4 million subscribers. Spotify revenue rose 13% to 1.89 billion euros. However, it's under analyst estimates for 1.93 billion euros. Net loss went to 356 million euros, which is like wider than 76 million euros that happened on the same quarter last year. Advertising revenue fell 21% year over year on this quarter because advertisers probably trying to limit their budget because they're trying to tighten the advertising due to this pandemic, right? Also, there is still another concern with their source of income, the musicians. So this has been around since like so many years, I think like since probably Spotify established, because the musician feel the royalty is very small coming from Spotify. And recently Daniel Ek, which is the CEO of Spotify, suggests that, okay, why not producing more contents? More volume means more revenue, right? More income to musicians. Of course, if you tell that to musicians, they will say, hey, quality over quantity, right? We're not some kind of manufacturing machine that can produce something like, okay, this is it, right? They're not like that. We produce music, quality music that our listeners, our fans will appreciate. So of course, there's always been a constant battle in terms of like royalty fee between Spotify and musician, which is their source of income. Number 4, Apple. Average cost, $257. Price as of July 31st, $444 for a return of 72.64%. It's crazy to think about Apple still experiencing growth in middle of this craziness, because like I bought this stock back in March. So this is very new in my portfolio. And then back in March, you remember like the lockdown just started to happen. And back then, the stock price went down for Apple because Apple shut down a lot of its stores, right? So people would think, oh, like people will not buy any iPhone, right? Totally wrong, because actually their revenue up 6 billion to 59.4 billion US dollars. It's crazy to think about that. And then the profit is a record profit in a quarter. It's like 11.25 billion. And Apple just announced 4-to-1 stock splits, meaning they will split one of their stock into like 4 stocks. So it will become more affordable for investors that probably couldn't afford their stock. And this arguably would make the stock even more liquid on the market. And don't forget, Apple will launch soon their iPhone 12, which rumored to be the first 5G iPhone. It is rumored the first series of the iPhone, because they have multiple types, would come soon around September to October. And there's another prototype, which is like the i12 Pro. It's kind of like, you know, the 11 Pro, which is the more expensive version, later this year. Number 3, Nvidia. Purchase price $236. As of July 31st, the price is $425, and the return is 79.54%. Nvidia is very well known for its graphics card, right? So if you see your laptop, like right now, I have like my Dell XPS. It has Nvidia inside, which enables people to play gaming. Now they diversify its business. So previously, probably they were focusing on the gaming portion, but now they also trying to go into data center. So they produce this chip that will enable acceleration of the data center to becoming more and more faster than before. So what drove this rally for Nvidia? So people bet that because this lockdown people would actually buy more and more gaming or game console that requires Nvidia graphics card. So the rally because the bet of like investor optimism of the sales. And number two, the e-commerce that we all love during this pandemic, Amazon. Purchase price $1760, price as of July 31st, $3,165, and the return was 79.82%. I mean, where do we start with Amazon? Now everyone just shop at Amazon these days, right? I mean, Amazon become a really savior for all of us that's stuck at home during this pandemic and during this lockdown, right? When the lockdown started, they faced a problem in supply chain. Of course, the warehouse workers want more safety in the warehouse, and also they ship only essential items, if you remember, back in March and April, and then they started to open up for non-essential items, I think back in end of April or early May. So let's talk about their sales, right? Like, how much are their sales up against last year? So their sales in Q2 in the second quarter jumped from 63 billion to 89 billion. It's a whopping 40% jump, which is crazy, right? Their net profit, it doubled from last year about 2.6 billion to 5.2 billion. So Amazon said online grocery sales, which I do. I mean, like, I order from their Amazon Fresh. It's already tripled from last year, and their capacity to deliver the grocery already increased about 160%. And their Amazon Web Services business segment, the business segment with the highest margin, surpassed $10 billion of revenue. The growth is a bit slower. It dipped below 30% for the first time to 29% below Wall Street estimates. But still, I mean, like, it's a very profitable business segment for them. Okay, now it's time for number one. What is the best performing stock on my portfolio? So number one is Salesforce. Yes, Salesforce. Purchase price of Salesforce stock was $92, and then the July 31st price was $195 for a return of 110.83%. To be honest with you, I know just a little bit about Salesforce. What I know about Salesforce is basically a tool to help the salespeople to maintain relationship with their clients. Is a customer relationship management tool that provide data analytics for the salespeople or the marketing people to basically analyze the data of their customers based on location, based on geography, based on historical sales. That's what I know about Salesforce. Hey, so you told me before that you buy shares from a company that you actually understand, that you know the goods and services. So what makes you buy the stock? So yes, back then, I didn't buy Salesforce stock. What I bought is Tableau stock. What is Tableau? Tableau is basically a data visualization software that help people to analyze big data into a very good display of data. Meaning that if you have a big data, if you have big numbers, a lot of rows, a lot of columns, you know, like Excel file, Tableau will help you visualize the data into like maps, into like fancy column. So the story was Tableau was bought by Salesforce back in July 2019. I think not July, but I think the transaction closed in July 2019. I have few shares of Tableau. And then it converted into Salesforce sales for about 1 to 1.103. So that's the story why I have Salesforce. And Salesforce itself has proven to become the leader in terms of like customer relationship management. And of course, the acquisition of Tableau, for example, will propel their revenue in the future. So that's a wrap for this video. Hopefully you guys enjoyed. A disclaimer though, before I close the video, I was actually scared that 2020 in terms of like stock market will become like 2008. I was prepared back in February or March that the worst thing would happen, meaning that the stock market will crash, recession will happen, which you know, for a short time it actually happened, but it rebound like really quick. So I was super prepared that, okay, like my portfolio will become like half the value of what it was back then. And probably, you know, like trying to probably just invest a bit of money, because you know that when it comes to economic downturn, volatility of the stock market, actually that's the time when you enter the market, you know, buy cheap stocks and then sell it like in the future if the price comes back up again, like 2008, right? It takes about like 2 years for the market to recover. And you saw that the top 5 most performing stocks on my portfolio are all tech stocks, right? Which is, I mean, like, it's understandable because the past 11 years bull market that we have right now is all driven by, mostly by tech companies. You see that retail sectors, a lot of retailers, big retailers are filing for bankruptcy, and also the energy sector is not doing great. Entertainment sector, I mean, all the movies are closed, right? All the cinemas are closed, no more events and everything. So it's very different reality if we compare tech companies and other sectors. So we need to separate that. And if you diversify your portfolio, you will see that there are stocks that actually went up, like tech stocks. And then I have also like few stocks not in tech companies that went down. So it's a mixed result in my portfolio, but please consider before investing, there are always risks associated in investing your money in the stock market. Right now, a lot of optimism came from the investors probably projecting that, oh, it will all get better in 2021 or 2022. So they're forecasted long term. They value the long term growth into the current stock price, right? So you need to be careful because like the market can crash anytime if you know we don't see any kind of progress in terms like the virus vaccine, right? I don't know what will happen for the next 1 or 2 years, but hopefully, cross fingers that everything will be okay. All right, everyone, stay safe and healthy. Don't forget to like, comment, and subscribe, and see you on my next video. Bye-bye.